My dear students, there is a good news for CA intermediate students. You are going to appear for examination on May 2. So, VS Academy proposed to upload all solutions to RTP 2023 May. So, we will take up the first subject, accountancy, and then we will solve and then we will issue one by one for all subjects. The first question we are going to solve is preparation of the balance sheet of the company as per Schedule 3 of Companies Act 2013. Let me read the question first. On 31st March 2022, Hari Limited provides the following particulars. Equity share capital. First, it is given, liability is given. Equity share capital face value of rupees 100 each. Rupees 12,50,000 rupees. And then calls in arrears 1250. So here if it is a share capital, we have to give explanation according to the as per the note given. For every information must be supported by a corresponding note. In this note we have to provide what is the share capital, whether it is a equity share capital or preference share capital. How many shares of issued, how many shares, how much issued, subscribed and paid up. So these type of details we have to give. And then the next one is very important, the calls in arrears. Normally the calls in arrears is an asset. Some shareholder failed to pay the call money. So we should not show it as an asset here. We have to deduct it. That is the main important thing that we have to look into. So calls in arrears must be deducted from the paid up capital. It must be appeared in the notes to accounts. And then land and building, plant and machinery, furniture. These are tangible fixed asset. So these details, whether there is a depreciation, whether there is any additional machinery, additional plant and machinery or additional land and building, any furniture and depreciation also we have to provide as per the notes. And then general reserve. The general reserve means actually reserves and surplus. As per the format given by, Schedule 3 of the Companies Act, what is the format? I will explain while solving the question on the board. So, the general reserve, capital reserve, revaluation reserve, any other reserve must be clubbed under the heading reserves and surplus. And the loan from State Financial Corporation. Loan from State Financial Corporation, there are two types of loan, secure loan, unsecured loan. Secure loan means that is the debentures, and then loan from other banks, that is the secure loans. Unsecured loans actually it is payable within a short period, that is to be appeared in the current liabilities. So we have to separate it. And then inventory. Inventory also there may be a work in progress, raw materials and finished goods. All the details must be given in the notes of accounts. And then provision for taxation. Provision for taxation, it is coming under the other current liabilities. Trade receivables. Trade receivables 2,50,000 rupees. So trade receivable it is an asset. So asset, trade receivable, there must be a note. It must be supported by the note. So the trade receivable, sundry debtors for the period more than 6 months and less than 6 months. So two category we have to mention in the notes. And then advances. If there is any advances, it is also assets. And then profit and loss account. Profit and loss account means it is a liability. It is a credit, actually accumulated profit of the company. And then cash in hand, cash at bank, it is a current assets. And then unsecured loan, long term. But here it is mentioned it is a long term. So it must be in the secured loan. So it must be in the secured loan category. And then trade payables, that is sundry creditors. Apart from this, there are many particulars are given, that is 2,500 shares were issued for consideration other than cash. That means, while entering the capital account, subscribed and paid up capital, one thing I had already told that we have to deduct the calls in arrears. And then one more thing we have to mention is 2,500 equity shares for issued for consideration other than cash. It must be mentioned in the notes. Note to account, in the first note. The debtors 65,000 included in trade receivables are due for more than 6 months. As I had already discussed, that is it is for more than 6 months and less than 6 months. So it must be in the note. And then the cost of the assets.
Cost of the assets, how much? Building 7,50,000. I mean, this is a cost. But we had already seen, I mean, in the previous page, what is it is given? That is a closing balance. So it is a opening balance. So the remaining should be the depreciation. So we must classify, must indicate it as per the notes, what is the opening balance, and then less depreciation, and then closing balance. All the closing balance must be appeared in the schedules, I mean in the profit and loss, I mean balance sheet. And then next one is the balance of rupees 1,87,500 in the loan account with state finance inclusive of 9,375 for interest accrued but not due. So 1,87,500, that is a loan from state finance, that is a secured loan, but it includes 9,375 for interest accrued but not due. So interest accrued but not due, it has to come in the current liability. So it has to be shown separately. So it has to be deducted from the balance of 1,87,500 in the State Finance Corporation's loan. And the balance of bank include 2,500 rupees Global Bank. So while we are giving the notes to the cash and equivalent, bank, I mean the balance with the scheduled banks must be given separately and balance with other bank give separately. So here 2,500 with the Global Bank, it has to be shown separately. So if we show, and then what is the procedure, what is the format of balance sheet, I mean schedule 3, according to the schedule 3 of the Companies Act. I will explain first and then I will solve the problem on the board. Please listen.
Now we are solving the problem on the board. In the books of Hari Limited, the balance sheet as on 31st March 2022. So what should be the format as per schedule 3 of the Companies Act? The first one is equity and liabilities. So equity, that is the main heading, equity and liabilities. Under equity and liabilities, the first one is shareholders fund. Under shareholders fund, it should be the first one, that's capital, share capital, and then reserves and surplus. So we have to show only the net figure. Every entry must be supported by note. So the note 1 for share capital. How much share capital? 12,000. You can see the question. Equity share capital, face value of rupees 100 each. That amount is 12,50,000 rupees. So equity share capital $12,500 shares of rupees 100 each. That is a paid up capital. Issued and paid up capital. So how much? You have to write like that: issued and subscribed and paid up. Issued and then subscribed and paid up. So equity share capital of 12,500 rupees issued at 100 rupees each, that is coming around 12,50,000 rupees. Out of this, you can see one important thing, that is 2,500 share issued not for cash. So it is separately shown. We have to show like this. So out of 12,50,000 rupees, 2,500 shares issued for not for cash. So 2,500 shares, within bracket we have to mention, shares issued not for cash. And then there is calls in arrears, 1,250 rupees. Actually calls in arrears, it is an asset. We have not yet issued, we have not yet allotted. So some shareholders fail to remit that money. So it has to be deducted from the share capital. So less calls in arrears. That is 1,250. So if we deduct 1,250, 12,50,000 minus 1,250, that amount is 12,48,750. This has to appear here. So 12,48,750. And then the reserves and surplus. Note number 2. So note 2, the reserves and surplus, there is a general reserve. general reserve. Apart from general reserve, one profit and loss account, credit balance also there. So profit and loss account. How much general reserve? So 2,62,500. And then profit and loss account 1,08,375. 1,08,375. So the total reserves and surplus is 2,62,500 plus 1,08,375. So it is 3,70,875. So it should appear here. So 3,70,875. And then one more item, non-current liabilities. And then B, non-current liabilities. Long-term borrowings. Long-term borrowing, if there is a debenture, it will appear here. Otherwise, other term loans. So a loan for a long period will come here. Here one loan. I mean loan from State Financial Corporation. How much loan from State Financial Corporation? Actually 1,87,500 rupees loan from State Financial Corporation. But it includes, it is mentioned here, 9,375 rupees for interest accrued but not due. So it has to be deducted. It has to be shown in the current liabilities. So long-term borrowings, how much? Note 3, long-term borrowings. Long-term borrowings, you have to mention secured loan. Secured loan is nothing but the hypothecation of plant and machinery, building, etc. in order to obtain the loan. So it is, I mean, they have obtained the loan from SFC, State Financial Corporation. How much they have obtained? 1,87,500 rupees. So State Financial Corporation loan, State Financial Corporation loan, I mean hypothecation of plant and machinery. So how much? 1,87,500 rupees. So out of this, 9,375 belongs to interest accrue but not due. So it has to be deducted. So 1,87,500 minus 9,375, it should be in the outer column. How much? So 1,87,500 minus 9,375. So 1,78,125. 1,78,125. Is there any other secured loan? Yes. Actually, unsecured loan, it is a current liability. But here current unsecured loan is given. But within the bracket, it is given as secure. So we have to treat it as secure. So unsecured loan will also appear here. Unsecured loan, how much? 1,51,250. 1,51,250. That is unsecured loan. So if we add these two totals, that is coming around the long-term borrowings, that is non-current liabilities. So 1,78,125 plus 1,51,250. So it come around 3,29,375. 3,29,375. So 3,29,375. Another important one is the current liability. In current liability, if it is unsecured loan, it will come there, and then trade payables, other provisions, etc. it is still coming. So trade payables, see, I mean current liabilities. Under current liabilities, trade payables. Trade payables means that is sundry creditors. How much trade payables? It is given the said amount, that is 2,50,000 rupees. There is no adjustment. So we have to mention 2,50,000 rupees. No need of giving the note for here. Trade payables 2,50,000. And then other current liabilities. I had already told this 9,375. Actually, it is included in the secured loan, but it belongs to the current liabilities, other current liabilities. It has to be shown other current liabilities. So other current liabilities. So thus that amount, how much? Current liability interest. You can note 4, for example, note 4. Interest accrued but not due. How much? 9,375. So this amount should come here, 9,375. And then one more item, provision for taxation. It is coming under short-term provisions. That is a current liability. So under current liability, short-term provision you have to mention like that. Short-term provision. So for that also you have make note of it. I mean note number 5. Note number 5, short-term provision. So provision for taxation, that is 1,60,000 rupees. It has to come here. So short-term provisions, provision for taxation, how much? 1,60,000 rupees. So these are the items are coming in liability sides. So if we add, that is the total liabilities, 12,48,750 plus 3,70,875, 3,29,375, 2,50,000, 9,375, 1,60,000. So the total aggregate amount, total liabilities, 23,68,375. The next one is assets. As per Schedule 3, the assets. What is the format of asset? Asset, we know non-current asset. Non-current asset, fixed asset. Under the non-current asset, fixed assets. Fixed assets, tangible asset, tangible fixed asset, I mean intangible asset. All land, building, plant and machinery, computer, and then car, etc. that are tangible assets. And then trade, patent, goodwill, these are intangible assets. Here it is not given. So whatever the only 3 assets are given. What are the assets? Land and building. How much land and building? The cost is 7,50,000 rupees. What is the closing? Closing value also is given. That is 6,85,500. So what should be the balance? That should be the depreciation. So we have to make note actually note number 6. So note 6. The first asset is land and building. Land and building. So it is cost price is 7,50,000 rupees. And then closing value is given. That has to be taken in the balance sheet. The closing balance is how much? I mean 6,87,500. So how much it should be? So the difference between these two is a depreciation. How much should be the depreciation? So opening balance 7,50,000 rupees minus 6,87,500. So depreciation should be 62,500. It must be mentioned in the note. And then next, plant and machinery. What is the cost? Plant and machinery. The cost is 8,75,000. And then closing balance. It is also given. The closing balance, actually plant and machinery 6,56,250. So what should be the depreciation? It is a opening balance, it is a closing balance. If we deduct these two, we can easily find out the depreciation. So depreciation, this also depreciation, this is depreciation. So 8,75,000 minus 8,75,000 minus 6,56,250. So 2,18,750. Even if it is not mentioning the depreciation, if you are not bifurcating these two, if you mention the closing balance, it will be tallied. But as per the rules, we have to mention clearly. So depreciation must also appear here. And then furniture and fixtures. Furnitures and fittings, how much? The opening balance is 78,125. Closing balance, it is given how much? That is 62,500. 62,500. We have to bring it in the balance sheet. So depreciation should be 78,125 minus 62,500. So 15,625. So this, if we add these two, that is the total value of PPE. I mean plant, property, and then equipment. So how much? 6,87,500 plus 6,56,250 plus 62,500. So 14,06,250. 14,06,250. It should come in the note 6. So 14,06,250. And then inventory. Inventory, there is a raw material and finished goods. I will rub it. Please make note of it and then rub it. Note 7. Inventories. Note 7. Inventories, raw materials and then finished goods. How much raw materials and finished goods? Raw materials 62,500 and then finished goods 2,50,000 rupees. So how much? 500, 2, 11, remaining one. 3,12,500 rupees. 3,12,500 rupees. And then trade receivable, that is a sundry debtors. We have to show that is the period exceeding 6 months and less than 6 months. How much exceeding? Less than. It is given in the question. You can see the question paper. Trade receivable outstanding the period exceeding 6 months, 65,000 rupees. But total should be 2,50,000. So, note number 8, trade receivable. So, note number 8, trade receivable. How much trade receivable? That is 2,50,000 total amount. So, exceeding 6 months. Exceeding 6 months and then less than 6 months. You have to mention clearly. How much exceeding 6 months? Exceeding 6 months, 65,000 rupees. So, the remaining balance should be less than 6 months. So 2,50,000 minus 65,000, that is 1,85,000 rupees. So the aggregate total 2,50,000 should be here. So 2,50,000 rupees, that is a trade receivables, that is sundry debtors. And then next, cash and equivalent. I had already told about if the balance with the central bank, that is shown separately. If any balance with the other bank, it has to be shown separately. Here one global bank, that balance also we have to show separately. So cash and cash equivalent, note 9. Note 9, cash and equivalent. Cash equivalent. So balance with the central bank. And then balance with global bank. So how much total balance? Global bank 2,500 and then others total bank 3,08,750. So 3,08,750. So what should be the balance with the scheduled bank? So 3,08,750 minus 2,500, that is 3,06,250. And then cash in hand, it has to be shown here only. So cash in hand, that is 37,500. So cash and cash equivalent, the balance should be 3,08,750 plus 37,500. So 3,46,250. So it should come here 3,46,250. And then short term loans and provisions. Short term loans and provisions, there is advance is given. How much advance is given? Short term provisions, that is separately given 53,375, that is advance. So short term loans and advances, the note number 10. So advance is how much? 53,000. How much? 53,375. It is another note. No need of note because only one item. So 53,375, note number 10. That's all. Now we will total it 40,06,250 and then 3,12,500 plus 2,50,000 plus 3,46,250 plus 53,375. So total balance 23,68,375. So it is totaled. The both asset side total and then liability side total tallied. 23,68,375. That's all.